Goldman Sachs special weekly chart. Once again, when Goldman was performing well over here, this was back over here. This weekly chart was back on 5/17 of 2010, over a year ago, when we hit the bottom of that weekly burn. Goldman made the high up here, but we told people it wasn't going any higher. Since then, it's had about a 19% correction, almost a 20% correction, which would also be classified as a bear market correction on Goldman. Goldman is in a bear trend, by the way. But let me tell you something about Goldman. Goldman's had various U.S. probes and federal governments come out. Goldman Sachs has, when I told everyone that we were going to have a big market correction, that Goldman was leading the way down, right along with Google. And let me tell you about the Goldman Sachs probe with the U.S. government. There's lots of implications that are up in the air about alleged activities, like there always is. You need to know, how does the market price in that news? Well, when you were up at 172, up here, up at these highs, this is where it all started back on 517 and or 524, 2010 up here. This bar right here is where we started to have problems, okay? And we can clearly see here that it's a weekly chart on our platform, and these are just where the stock is trading right now. It's not down on the day. The thing that I want to make clear about financial markets is that Goldman Sachs is not a retailer like Schwab and all them other places. They deal with big people that trade with Goldman. And if Goldman gets a criminal indictment at all on these alleged activities, you could see where all of those people that trade with them under the laws, if there's a criminal indictment, they can't trade with them. That would send this thing and the markets in a tailspin. And I literally mean that. That means that the broader market itself would get extremely weak, because there are lots of institutions that are tied in with Goldman, market makers, and everyone alike. And the thing about it is, people better be careful what they wish for. Now, the price at the current level without that indictment is pretty much trying to price that in about 19 to 20% lower over the last several weeks here, which we've had a capitulation all the way back down to a year ago bottoms on this weekly chart, and we're kind of going sideways. And we'll be reviewing Goldman specifically so that people can see how bottoms get put in, or price in bottoms, with all of those events and all the news. So far, every time Goldman has settled the last fines of $550 million with the government, they seem to always either settle or somehow come out ahead and get out ahead. So the thing about it is, for the broader markets, if Goldman gets indicted, it's not going to be so well for the trading partners with Goldman, because under a criminal indictment, as I believe it, and remember, I don't know the laws 100%, but the way that I understand it now is that if Goldman gets indicted on stuff that's criminal charges, the people that trade with them are no longer able to trade. And that would dry up Goldman's business. Whether it turns out to be a Lehman Brothers, we don't know. Too early in the making. I can tell you, though, that the broader market will sell off to very much lower levels if that should be the case on Goldman Sachs. We will also take a look at Goldman Sachs here on a daily, which is a 3-minute chart. It's gone up, and it's got its volatility in face of all the news. One of the other things I'm going to show is a weekly chart. One of the things that we like to tell people, this is what we call a weekly chart on Goldman Sachs. And when Goldman Sachs broke below all its weekly moving averages, once again, it's a different chart than the SMF platform. And down here, we've been consolidating, but what I want to point out to MMT is about public analysis, is that when we hit a bottom over here, we were we got to 7.07 on a percent DS, and for 1 week, 2 weeks, 3 weeks, today being the 4th week, as Goldman has come down to this major support line down here around that 131 handle, okay? And it's tried to price in all its bad news, whether what things happen or not. But once we break below here on a weekly, we go lower. We are going to get on this blue bar MMTs. It's called moving average convergence divergences. When they get down to certain peaks and they stop going down here and you start to come up in value, that's when names start to put in bottoms in the shorter term. We are technically oversold in face of all the news because we are on a weekly level. That's why we haven't broke that 4-week support level. Once again, special on Goldman Sachs, government probes, potential SEC indictments. There's lots of things going on with Goldman that really could cause turmoil within the broader financial services across the board in the trading community, institutional community, the whole spectrum. And people better get a grip about it. That's the special on Goldman. Things that we've been talking about well over the last year, and they're finally coming to fruit. But we got so oversold that when you get this oversold somewhere, if those allegations don't prove out, then Goldman's got a lot of big upside. But we're early on for that. Right now, this weekly chart, Goldman is probably one of the most technical damage charts on here. And Goldman always leads the market way ahead. Bear markets, they go into a bear market like it is right now. The broader index have a tendency to follow Goldman. Might be a couple of months later. So far, we're 6 weeks into it. And as I said, when we were shorting the tops and all the indexes 6 weeks ago, going on the 7th week now, and the Dow, the NASDAQ 100, the NASDAQ comp, and the S&P 500, is that the broader markets would follow Goldman. And just to do a comparison, this is something that the broader markets are going to be looking at moving forward.